If SPH gets acquired, its shareholders will get a current market value of around $2.10 per share. That's a 40% premium on its last traded price before SPH announced a strategic review of its business in March. At least one analyst says shareholders will likely back the deal since they will continue to get steady dividends.
If you think about the mindset of SPH shareholder, all they want is recurring income. And that was something that SPH was always able to deliver to them, recurring income in the form of dividends. So I think this particular deal, they will get some cash up front, and they will also get shares in Keppel REIT and also SPH REIT, both of which are good distribution payers.
Mr. Kaur says shares of a company making an acquisition usually fall after the announcement, but he thinks the share prices of both firms will go up. He says that's because SPH's non-media assets are a good fit and hard to come by for Keppel.
They get an opportunity to buy some really prized assets. I mean, you're talking about Paragon, which is owned by SPH. You're talking about Clementi Mall. You're going to be talking about the nursing homes, student accommodations, the data center. I think in the future, what is going to happen with Keppel Corp after it's bought all of these assets is to try and inject those into some of the REITs that they have.
Securities Investors Association Singapore says the bid opens more doors for Keppel. The association will hold dialogue sessions for shareholders of both firms once an SPH-appointed independent financial advisors report is in.
I think this is a great opportunity for Keppel shareholders, especially in light of the deconsolidation of Keppel O&M. So that gap will certainly be filled in by the SPH assets as it goes over to Keppel. For the SPH shareholders, it's also a great opportunity for minimal disruption for them to extract value from their shares and to be able to then get a look into Keppel's operations.